Good evening, everyone. I'm Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Stallion India Fluorochemicals Limited. Today, we will provide a brief overview of the company and its innovative business model. Stallion India Fluorochemicals Limited is into the business of sale and refrigerants and industrial gases, along with related products. The company's core operations include the bulking, blending, and processing of refrigerant and industrial gases, selling of pre-filled cans and small cylinder containers. From management team, we have Mr. Shehzad Rustamji, Chairman and Managing Director.
Good
Good
evening.
evening, sir. Welcome.
Thank you. Good evening.
From Sarthi Capital Advisors Private Limited, we have Mr. Rajesh Rawat, Senior Research Analyst.
Hi, good evening, everyone.
Um, Now I hand over to Shehzad sir to give a short intro and journey of the company. Over to you, sir. Thank you.
We started this company in 1992. I'm the first generation entrepreneur. Company was started by me, and uh, we were from the day one. We were very focused on where we wanted to be, and where we are is exactly what we had envisaged in 94, 95. The journey, the last 30 years journey, has been completely focused on reaching where we are today. So, meaning we did not divert or move into other business areas or products, etc., because we are exactly where we wanted to be 30 years ago. And we started in 92. By 98, we had set up a first unit at Padvale. Then the markets were divided at that time only in the west and north, north NCR region. So our second unit came out in 2002 in Manesar, Gurgaon. Thereafter, we moved. When we started, we had a proprietary concern, Stallion Enterprise, because we had just started the company at that time. Um, as we moved on, we had already crossed the 100 crore turnover in 2002. So we formed the private limited company, Stallion India Fluorochemicals Private Limited. We wanted to shift over all the business into that company, but we realized we had a lot of excise credits in the earlier company, which would be lost. They were exceeding 10 crores in those days. So we continued with the proprietary concern also, and we the new businesses were started in the private limited company. We started a Khalapur unit in 2012. We started work on that. In 2018, we set up a new unit in Gilot near Nimrana, Rajasthan. And the four units basically form the core of our operations till date. Thereafter, we already acquired the land at Mambatu, which is near Sri City. This completes a pan-India presence because south we did not have a plant existing till date. Uh, the purpose of going public, uh, of moving into a listing, has been that we have reached a level where now from here when we are moving into the new products and we are moving into all the growth areas that we have clearly defined of what we are going to be doing in the next 3 years will be capital intensive, and with the high growth we will require the finance also. Plus, onwards, it makes a lot of sense for the markets to be familiarized with us, to see our results, see how the company is moving, how it's growing, and what its plans are onwards. Thereafter, when we want to move for any bigger ticket acquisition or backward integration or anything, it is easier to approach the market than when we are just a fresh company. In October 23, we merged both our firms. The proprietary concern was taken over by the private limited, and it became public limited. So that consolidated all everything that we had into one company. And basically, now we've approached for the listing. Our plans onwards, the reason for what we have mentioned in the listing is we're setting up a HFO facility in HFO blending facility at Mambatu. and a specialty and semiconductor gas unit in Khalapur, adjoining the existing unit. Both these would be driving the growth for a company because HFCs, hydrofluorocarbons, currently in use in refrigerants and other applications, have been slated for phase out under the Kigali Accord, of which India is also a part. And the Indian government also has a phase out program, phasing out all use of these gases by 2047. So the HFOs are the new variety of new molecule that takes over from the HFCs. Hydrofluoroolefins are very low GWP products and replace these gases. So the Mambatu facility would be a driver for growth, and the specialty and semiconductor gas units in Khalapur, what we are putting, it's a new growth trust area, and that is also going to be adding to the revenues and growth for us. Also, it would help us diversify out of specifically a large share of business coming from refrigerant gases. This diversification would be very helpful and healthy for the company. So that's the gist of our journey till here.
Thank you, sir. We'll start with the presentation.
This provides you the background of what the products ranges are and a little on the company. This is showing a journey when we started off, where we set up the right from where we set up the facility at Manesar, Gurgaon, to the facility at Khalapur, and the takeover of our proprietary company in slum sale, as was described by me earlier. This is how the business segments are divided between refrigerants, non-refrigerants, and others. Primarily, when we started off, and for a very good part of our business, we were only a refrigerant, uh, meaning we were only dealing in refrigerants. Now, as we grow, the part of the pie is now being taken over by non-refrigerants and other businesses. These are all aftermarket accessories and supplies. Most of our gases are available in the can form, ready to use for the aftermarket. This is basically giving a broad spectrum of what the non-refrigerant usage of our products are. Basically, if you go to see, it all comes under the broad fluorine family. And although there are about 500 odd products in that category, about 40 molecules are what are actively used in India. And not all of them are used as refrigerants. They also have multiple use, like fire extinguishers become a big way in pharma, propellants, aerosols, treatment in gas and glass industry for polyurethane, polystyrene blowing, and again like semiconductor and specialty gases. This is providing a pie chart showing, as we said earlier, product mix and where it's moving today. These are briefly showing our facilities at Khalapur, Panvel, Manesar, and Gilot. This is providing a little bit on the expansion that we are looking at. These are the directors, main directors of the company. This is just giving an overview of the global market and the major players in the global market and the market shares. We are very closely associated with two of these companies. There's an overview of the Indian market. This providing what where the opportunities are going to be coming, and all the like global environmental regulations, uh, uh, rising application of refrigerants, and in the new semiconductor and specialty gas areas. We are focused and we are very much in all of them. Government policy. India is currently undergoing the third phase out of products due to environmental issues. The first phase out happened in 1995, where India became a party to the Montreal Protocol. At that time, the ozone layer was found to have been damaged and had a hole due to the very heavy use of certain products, chlorine, bromine containing products. And the largest contributor, it appeared, was CFC gases, chlorofluorocarbons. Basically, the halons that we use for firefighting and a CFC 12, CFC 11 that were used in your refrigerator and as aerosols or propellants or blowing agents. They were phased out in 95. They were replaced with what was thought to have been a very good product, HFCs, hydrofluorocarbons. These did not have chlorine and hence were non-ozone depleting product. But as we entered into 2005, the euphoria died down that this is the magic bullet and everything is solved. Suddenly they realized that these products have very high global warming potential. Global GWP or global warming potential is the equivalent of they take one part of CO2 and one GWP is equal to one part of CO2 as an equivalent. So the products the HFCs that were in use range from 600 GWP to over 5,000 GWP, in some cases exceeding also. And so you can imagine if CO2 is a global warming product and very bad, how much worse these were. So suddenly the discussion became globally, and with the change in global climate, Kigali Accord came into place, which India is also signatory. It's a global accord like the Montreal Protocol. It's a continuation basically of the same that mandated the phase out of all HFC gases. And what was mandated was what was approved were the HFOs, hydrofluoroolefins, which had less than 150 GWP compared to an average of 1200 GWP for HFCs up to 5000. These were from 0 to 150. Hence, the HFOs became the new product that would replace this. So we're in the third phase out. The second phase out was in 2010 for it started in 2000 for HCFCs, hydrochlorofluorocarbons. That is basically R22 that was used in your window air conditioners. And this is the third phase out that's happening. So this is giving you a little understanding of that government policy. Now, the explanation which I gave for the HFO and HFCs, we are entering the sunrise products. The Mambatu plant would be a proper HFO blending facility, and those are all the sunrise products. Now, HFOs are heavily patented, and amongst a peer group, nobody have the permission to use it. Stallion is among the few companies, due to a close association with the one of the patent holders, where we have been associated over 20 years with them in business and in jointly marketing the products in India. So we have absolutely free access for all HFOs and um, also the right to use to sell in India. The plant in Mambatu, as explained, is going to be a HFO blending facility. The plant in Khalapur would be the specialty gas and semiconductor gas products unit. Giving an overview of what we just spoke. So the shareholding before and post, the key performance indicators, a financial statement. These are all available on our website also.
So during FY24, our companies have reported the total revenue of 236 crore with EBITDA of 26.7 CR and PAT of 14.79 CR. And for 6 months FY25, the company has reported the revenue of 141.53 CR with a PAT of uh, 16.57 CR. And for September 6 months, we have reported the PAT margin of 11.7% as compared to 6.26% in FY24. So we have done the better margins due to better realization in our product mix and with a greater volume. So this is the financial snapshot of the business. So this is the our competitive landslide. Uh, we have competitors like SRF, Gujarat Fluorochemicals, and Navin Fluorochemicals. Uh, in terms of revenue, we are a smaller player, and we have to see it like that. They are the manufacturers, and basically, we are not manufacturing the molecules. So our revenue is basically derives from trading of imported product, whereas we also blend few of the HFOs and HFGs. So they
It's
are
all
not exactly the comparables. And even if you can see the margins, because being our competitors are being the manufacturer, they enjoy the better margins as compared to us.
Rajesh, I'd like to add.
However, we are zero debt companies and we have only short-term borrowings in our balance sheet, and that is basically for our working capital requirement.
I would like to add also one thing in this. The turnovers shown are not just the gas turnovers. Those companies have varied in the interest in various other industrial segments. So that's a total group turnover, what you're seeing, not related to just our business, what we are currently in.
Okay, thank you, sir. Now we will start with the Q&A session. I request all the participants to post their questions in comment box. Thank you. So we have first question from Mr. Rahul Jain. Please tell us about various products of the company.
Basically, all the products we have fall in the category of HFCs and HFOs. Uh, the Like I mentioned earlier, there are about 40, approximately 40 products that fall under the HFC mold, and these are used in various segments, predominantly air conditioning and refrigeration. But they also have application in firefighting. They have applications in how to say electrical distribution, meaning the insulating gases are used in all the high voltage substations and circuit breaker industry. Then you have pharma propellants, you have regular propellants and aerosols, blowing agents for polystyrene, polyurethane, and various segment-wise segment, like a treatment gas for each particular industry. Like for glass bottles, you earlier they used to use ammonium phosphate tablets for removing the blue, making the bottle neutral. Now, the fluorine products that are there, they are used for the same purpose and more efficient. So basically, you've got products that are um, having application in most industry in India. We deal with almost every industry and industry segment in India.
Okay. Next question, Kuber Chan. How different are we compared to peers? Supply side of dominance.
The difference between us and our peers is out of 40 products, 40 molecules, the peers make one or two molecules. They manufacture it in the sense they take the raw material, the fluorospar, it goes to the process with addition of AHF, it goes to a reactor, you have a waste stream, you have a continuous process plant, and they get the production out of that. So out of 40, they make one or two molecules. The remaining is similar to us. The blending is the proportionate mixing of the different molecules in a set formula and in through a process. The gas made is an irreversible process. It doesn't split back again to the original. So it's basically also a manufacturing process. And in all the other things, we remain the same. It's only the manufacture of the base molecule of one or two molecules that they do is what differentiates us. Where they have the strengths, we have our strengths in the sense they do not have a fully front end integration. We have a pan India presence with all our facilities, our plants, where we are just in time to every single customer, and we have the front end completely covered. They have the back end integration covered. So both have their strengths. These are older companies, they're professional companies, they're bigger companies currently. It will take us some time to catch up, but
Okay. Next question, Neeraj Apte. What is the present positioning of the company in the domestic and export markets of our company? Which industry segments does company largely cater to?
currently we concentrate mostly on the domestic side. Export markets, we have currently not explored. We have exported some materials on off to Middle East, to various Minicolombo, Sri Lanka. We have analyzed and seen the feasibility of exports currently, and we still had a lot of the Indian market itself to capture. So basically, till now, we have not concentrated on export. Post IPO, we definitely have a very strong view to boost the export part of our business also. Uh, the segments that we mainly cater to, largely currently, air conditioning, refrigeration. Then you have the electrical industry, the insulating gases, where we have almost 90 to 95% dominance. Then you have the new blowing agents, the HFC and the HFO blowing agents, where again we have almost 90 to 95% dominance over all the peer group also. Then the HFO segments, which will replace the HFCs, there again we believe we have over 75% dominance. So where we are low is in the HFC side, but this market is going to slowly change over into the HFO side.
Next question, Ishita Ahuja. What is the present revenue breakup product vertical wise as on financial year 24 and last year? Also, what is the marketing touch points the company enjoys as on date?
Basically, the breakup roughly to give you would be of the revenues. 38% came from the air conditioning refrigeration segment, 16% from the automobile industry, 7% came from aerosol product segment, 12% came from electrical insulation gases, 8% again from the stationary segment of the air conditioning refrigeration, the chillers basically, 5% came from the blowing foam blowing application, polystyrene, polyurethane, and the marketing touch points that we enjoy as on date. Like I said, there are a lot of the industrial segments where we have a very good dominance, and we would be growing on those areas because those are the growth areas also. India basically has a very robust growth in the air conditioning refrigeration segment in most of the segments, because if you see the earlier per capita consumption or penetration of the air conditioning refrigeration segment, meaning you know what it meant to own a AC in 1990, an air conditioner. It was an absolute luxury. The cost was prohibitive, and if you had an air conditioner, people looked at you differently. Today, it's a necessity, and it's still very low per capita compared to the West. So year on year, this industry has a robust between 10 to 20% growth rates. In different industries have different growth figures. So that's why I'm saying 10 to 20%, but averaging 12 to 15% growth. And for the foreseeable 5 to 7 years, we see this continuing. So we have in all the segments that we are, the ones where we have dominance, we would build upon, and the other segments, like I said, the HFCs changing over to HFOs would provide us the avenue again for growth.
Okay. Next question. Gauri Gaikwad. Which are the key customers serviced by the company here vertical wise?
We wouldn't like to take the customers' names basically without their permissions, etc. But let me put it this way broadly, just to give you an idea. In every industry segment, the top leaders we are working with them. Like if you take for the insulating gases, where we have clear dominance, uh, every single manufacturer, every single large company from General Electric to Siemens to CG Power, Hitachi, Toshiba, uh, uh, yeah, ABB, then BHEL, Power Grid of PGCIL. Basically, we are one of the two approved sources only for PGCIL. So basically, that gives you an idea that as the spectrum of industry in each segment, whichever we are talking, all the top companies we are associated, we are working with.
Next question, please. Dia Patel. How are the current demand trends portraying as on date for the company?
I think the first half of the year has clearly shown you how the demand and trends are looking, and we are bullish that it is going to look similar onwards. Usually, this our type of industry have a very clear cyclical demand supply curve, and currently we are at the start of the ascending curve.
Next question. Devesh Purohit. In each of its products services segment that company operates, how is the pricing done with customers?
You have two segments of customers. One segment is the OEM customer, a local manufacturer, a auto manufacturer, or a air conditioner manufacturer, or any of the products which we're talking of, product segments, the manufacturer. And second is the aftermarket. In a developed economy, like for the HFCs, the OEM business would constitute about 20 to maximum 25% of the total volume of business. 75 to 80%. In reality, it should be 80% for HFCs because it's been around for quite some time. After 10 years, the life this sort of graph you see. So we see 80% in the aftermarket. Aftermarket pricing, you do not need to negotiate or speak with anyone. The company releases its pricing to the market, and it's in line with what the demand supply situation is, etc. With OEMs, it's a very different thing because they have costings to take into account. They have their production costs that they need to define, they need to fix. So you cannot have variables in that. So it's usually a quarterly or half yearly sort of a pricing that is fixed on a contractual basis with them. Then whatever goes up or down, it makes no difference. It's fixed. These pricings are fixed on real time cost analysis of where the forex, where the dollar is going to be 2 months from today, 6 months from today, and the cost of raw materials. So it's basically companies like us where you have a first generation entrepreneur running it and your whole team is first generation. You have 30 years of experience, you have 30 years of knowledge and specific to this industry itself. So very easy for us to understand how things would move, etc. And that allows that goes into the process of fixing the pricing.
Next question, Deepak Kulkarni. In terms of competitive landscape for your business, which are the other large competing players operating here in all your business segments? Any domestic names who compete with you?
We have already provided the peer group, SRF, Naveen Fluorine, GFL. These are very strong Indian manufacturers, meaning we are very proud that in India we have a very strong manufacturing base and we have very strong competitive companies. These companies are very respected abroad and are formidable players basically in India also. And basically they form the peer group of the businesses operating in India.
Next question, Sachin Gupta. Which raw material costs at 85% does the company plan to reduce this expense?
The raw material costs at 85%. Basically, when we go into the new products, the as we are moving onwards into HFO blending facility, the specialty gas, the semiconductor gas, we would be having more of a control on these raw material costs. And we feel that the ratio would better improve. See, currently, as it stands, all our product is imported. All our products are, how to say, they're, they're basically finished product. We're not manufacturing the molecule. But now, when you get into the semiconductor side, the specialty gas side, everyone becomes equal. Stallion would be equal to Linde, the largest in the market. It's a multi-billion dollar MNC. There would be no differentiation between us and them because helium, all the rare gases, krypton, neon, argon, krypton, neon, etc. All these are natural gases. No, you cannot manufacture them. Helium comes out from the ground like a natural resource. Then how you handle liquid helium? It comes blanketed in liquid nitrogen. How you transport, how you destuff, how you have how you purify it, how you ensure that liquid helium reaches the customers before it boils over and vents out. Those are the specializations of that industry. Number one. So there we would be equal. The pie chart that you saw with a predominantly refrigerant figure, that pie chart, the turnover would grow. That industry also, that business would also grow. But the pie chart would really come down for the refrigerants, and these other products would become a significant portion of it also. There we would have a far better handle on the raw material cost onwards.
Next question, Ajay Gupta. Please explain government focus and support for producing zero ozone depleting gases like HC, HFC, and HFO.
The government, meaning, has a very clear-cut policy. The Ministry of Environment and Forest, which handles matters relating to ozone depleting products, etc. I have a very clear mandate, very clear understanding of how they're going to tackle this issue. It's a global accord which India has signed. The ministries are very clear. They were very well defined and laid out process, procedure of how they're going to be taking India from here to 2050. The government itself is very clear that environmental stewardship, making sure that we leave a better environment, a better, how to say, cleaner future for our children, is very much focused on that. And you can see it on all the policies that they've laid out. So, the support for phasing out of the HFCs, hydrocarbons are natural products, but they're flammable, meaning propane can also be used for air conditioning. Already, every refrigerator works on R600A. It's basically isobutane, but it's a flammable gas. So, very highly flammable gases like propane, etc., are not exactly what you would want to propagate into your home. Although, like in the refrigerator, it's pretty safe because each refrigerator has 90 grams. Isobutane is a non explosive gas, it's a flammable gas. Propane, on the other hand, is an explosive gas. So basically, we don't have a very well defined policy of what may not be used in how to say residential appliances, etc. Like in the West, they have. Here we don't have. But on the HFC, the government is very clear. The current 3 years are the defining years where they will be establishing what is the quotas for manufacturing or import. Those quotas will be fixed at the end of 26. From there, every 3 years or 5 years, as the government mandates, there will be a cut in the quota till it finally comes to zero in 2047. And the HFC phase out policy is already declared. There will be a great push to help HFO production in India.
Okay. Next question. Who are your who are your comparable peers and how do you justify your IPO valuation?
The comparable peers we have already mentioned, SRF, Naveen, GFL, etc. And the IPO valuation, basically, I think the market would go through it, and the valuation would be done on the basis of the evaluation.
Next question. Raj Gandhi, does the company produce any ozone depleting refrigerant gases like CFCs or HFCs?
Stallion phased out all CFCUs by 2002, and though we were allowed to still deal in it in 2010. And Stallion moved out of all HCFCs in 2017 itself. After 2018, we have never dealt in any HCFC or any CFCs thereafter.
Next question. Sachet Gupta, why the company is experiencing negative operating cash flow and what measures are being implemented to improve it?
Basically, when you have a continuous growth, sorry, when you have when you have a continuous growth, your requirements for cash is going to be more. Number one, the dynamics in the industry in this business has changed. Now, when you're having phase outs, when you're having regulations, when you're having restrictions, every product that we deal in is heavily regulated where you have to get clearance from Ministry of Environment. You need to have the clearance from the ozone cell. You need to have the special import licenses from DGFT. So it is so heavily regulated that your time for operations, your time between which you can literally just walk in, like suppose you wanted in some other industry, you wanted something, you just place an order, it'll come. Yeah, it's something like a logistical 3 month process. Number one. Number two, what we are seeing in India is being followed identically everywhere. So in US or China or Middle East or anywhere else, you have similar departments in the government which will be issuing licenses. Anything I wish to import or they wish to export, there is a license provided for that. It takes time, anywhere from 20 days to a month. So now with this changing scenarios, secondly, India has started as the quota right now, while the West, the developing nations, including China, they are in the cycle of the first quota cut. Well, we are just starting up. So what happens is when a quota cut happens, you will suddenly see a rise in pricing, general pricing in the industry, because now what the industry was selling 100%, suppose they were selling 10,000 tons, they were selling at, I'm just giving a, for understanding, say at 300 rupees. Now the quota cut has come and they can only sell 7,500 tons. So they will remove their overheads, etc., and increase the price to 400. So all these things, all these cyclical and dynamics that are changing very rapidly, you need to have higher stocking. You need to have higher, meaning you know that 2 months down the line, this event is going to happen. So you probably will be making sure that your next quarter requirement, where your commitments are, etc., is already procured by you. So in whatever things the finance economy has to do. Yeah.
Next question is from Mr. Sai Arora. In past 6 months of financial year 25, top line has totaled to 141 CR with rupees 16.57 CR. Can you share what is the key reason for the sharp improvement in profits?
Yes, I had mentioned in the start when I was giving a little brief on our company. We had two companies, Stallion Enterprises, which was our proprietary concern, and Stallion India Fluorochemicals Private Limited, which was the private limited company. Stallion India Fluorochemicals became public limited in October, and it also, it's 30th September, it had taken over the proprietary concern in a slump sale. So last year, what you saw was the 6 month revenues of the proprietary concern, and the 6 months that we got is the low end of the uh, uh, of the year. In the sense, the peak of the sales happens between Jan to June, and July to December is the low end of the cycle, the sales cycle, the revenue cycles, etc. So currently, what you have seen is the addition, the first half. You've seen the addition of both the combined turnovers and the profits coming in.
Next question. Anuraksha, average working capital cycle for the company.
It should be about approximately 120 to 150 days.
Okay.
The
Next
figure,
question. Yes, sir, please.
no.
Okay. Mr. Dev, which is our product with highest volume?
Currently, it should be R32 gas, which is used in your air conditioners, air conditioners, and which is one of the molecules manufactured by both our peer group companies. And this was our highest volume product. But uh, till now, as we go forward in the pie, as we explained, when the new products start taking over the volumes, the new applications start taking over, you will find this coming lower and lower in our pie. Meaning next year, this probably would not feature anywhere in the top five products.
Okay. Next
That
question.
does not mean the sales will go down. It means the sale of other products will go up.
Okay. Lavanya Balakrishnan, what is the company's current market share in the industry?
It
So
depends
in the
in which
industry,
industry.
as
Sorry, it depends in which
so
industry segment.
on consolidated basis, Saya sir, let me answer this. So on consolidated basis, as compared to our three peers like SRF, Navin Gujarat Fluorochemicals, uh, we enjoy around 10 to 12% of the market share.
Okay. Next question. Do you sell through distributors? How is the marketing handled?
We sell through our distributors.
Okay. Next question. Vijay, how much turnover is from pure trading and how much is from blended molecules?
It should be about 70-30.
Okay. Next question. Kaushal Sharma, what is the reason of high inventory and receivables in the business as these impacting our cash flows? And what is normal inventory days and receivable days in our business and overall working capital?
Basically, as we mentioned earlier, the continuous changing business environment, the dynamics that are continuously changing. Now, you have to understand that 85% of the dominance of manufacturing or raw material come from China. There are major upheavals in China itself. There are major, how to say, movements and dynamics in the entire regulatory framework globally, not just in India, that are taking place, wherein when you when you are at a stage when you know that the cost of this product is near the, how to say, manufacturing cost or at a very reasonable cost, it would make a lot more sense to build up your raw material rather than wait for everything to see a spike when you have no control in your hands. So current dynamics suggest that longer, higher inventory holding would make a lot of commercial sense. See, when we have to deploy our funds, we would use our experience, our knowledge accumulated over 30 years to understand that when is the right time to deploy the funds into raw material, when is the time to move out of raw materials. So basically, currently, as we said, when we are looking at a growth in turnover, our current year's turnover is much higher than last year's turnover. And the subsequent year also, we are hoping that we will see the constant increase that we have in our turnover. As a result, you're going to have more invested in the raw material and the stocks, etc. Inventory days, as we move into new product applications, and new industry circles. A lot of the new industry circles were all on 120-day payment terms. They're all MNCs, they're all sound companies, but they're still on 120-day payment cycles. So basically, by the time we work around that and get everything, short-term impact would be there. But the costs are all covered in the pricing that are fixed.
Okay. Next question. Janvi Kedia, what effects do you expect in market and the company on the basis of US refrigerant gas price hike?
A good effect. Uh, let's put it this way: the current hike in price, the current this, now just reflect exactly what I'm about to say right now with the last question. Why is your stock holding so high? Now, why am I smiling right now? We bought when everything was low. Our experience showed us that as you come, we have seen three cycles of this up and down, phase outs. We have seen 10 major spikes in this industry. When we say spike, we mean pricing going over 100 to 150% for a prolonged period. We have seen 10 such in 30 years. We have seen three phase outs. We can read everything absolutely as it unfolds. Your first quota cut is coming up. While everyone was sitting, we already know that the minute 10% cut comes, everyone's going to increase the pricing by 25-30%. We ensure that our entire next quarter production, whatever we require, everything is with us. So that is why relating it back to the last question and explaining. So it is good for us, meaning I believe this is very good for the peer group companies also because they have a large export to the US. So all in all, this is very good for the Indian industry.
Next question. Ashok Shah. How much trading volume and manufactured sales?
100% is manufactured because trading trading is if you buy a bottle and you sell a bottle. If you buy in a tanker, you unload it into your holding tanks. You're going to process it, pack it. You're going to brand it. You're going to test it. You're going to stand guarantee for the product you have produced, and then you're going to market it. It is no longer trading. It is manufacturing. In excise, this activity was also deemed manufacture. So, firstly, like I said, 70% is reprocessed and 30% is physically manufactured. So it all comes under 100% manufactured. There's no trading.
Next
Meaning
question.
nothing that came in its original form is being given to you. It is completely being changed and given to you.
Okay. Next question. Stock analytics. What could be the average EBITDA margins after the new capacity fully comes online?
I don't believe we can answer this because futuristic figures cannot be provided as per SEBI guidelines.
Yes. Next question. Next question, please. Arav Banerjee, is IPO attractively priced?
Attractive for whom? For me or for the public? Again, like I said, I don't think we can answer this. Rajesh, if you can answer this.
So if we compare our peers with us, I think the ideal price is for a fair value. Our our peers have actually headline a P of something around which ranges from 49 to 114, and the post-issue multiple at how that been is will roughly around 22 to 23 years. So uh, the IP price is quite justified in terms of valuation.
Next question. Raj Gandhi, can you explain the debulking process and the typical weight range of tanks after converting from ISO tanks?
Basically, debulking process is the unloading. See, when you receive any product in bulk, it'll come in a ISO tank, which is a gas tank containing 20,000 kilos or more of product. Now, this comes to your facility. It through a process, it is unloaded into your system, into your bulk tanks, and thereafter the testing process starts that whether has this been accurately done, and then the filling process starts into the containers that are required for each industry group. The container sizes range from 1000 kg to depending on the filling ratio 800 kgs to 450, 100, 65, and the last 10 kilo. 10 kilo usually is for the aftermarket segment, 10 and 60 kilo. Industry is all 450 to 800 kilo packings.
Next question. Kuber Chauhan, do we have customer stickiness because of competition and those competitors are older than us?
I'm trying to understand exactly the question. Stickiness, meaning what I understand what he's asking is, do you find that is it difficult for you to take the customer from the existing competitors who are older than us? Is what my understanding of this question is. India has, in India, the industry works on a very different parameter in the sense, like if you're dealing in the West, if you're in America, if I am in America, I suddenly decide I need to offload certain volumes. I need some volumes or turnover. So I'll go to General Motors. I'll give them a price offer which is very competitive to everyone else. And for the next quarter, I'll give an offer. And General Motors will just take it. He'll buy 100% from me at that price. The next quarter, suddenly I realize, no, no, I'm making a mistake. I get better realization from you. I don't want to sell anymore. So I just go and tell General Motors, I'm sorry, I don't. That's not my price anymore. For next quarter, my price is X plus 50. So General Motors says, no, we've got much lower pricing. We say, okay, fine, we'll come back again after this quarter. So you just went in one quarter, you supplied General Motors, the largest auto manufacturer in those days. And then you just walked out in 3 months. Now, similarly, if you go, I won't take names, you go to any Indian auto manufacturer. Once you're approved, once you supply, once you're in, uh, it's expected till your company exists and that company exists, you're going to be in. There's no in out in India. So if you're in, you're going to be in. If you're out, you're going to be out. So what happens is you had a very cultural difference in how business is done abroad, business is done here. A lot of the MNCs never understood this. As a result, they had issues. Now, slowly, this is also evolving in India and a lot of the companies, but still, it remains that when you're in now, just to give you an idea, when you say these competitors are older than us, we have been there right from the start, 1990. They were 87, 89, whatever. So we are among the oldest company in India in this field. So wherever they were, we were there. So we don't have that stickiness issue.
Next question. Mr. Dev, how is the pricing of products? Do we have some power or it's international pricing?
We definitely have the power because the international, if you have the experience and knowledge base that our company has, it is very easy for us. Like in 2017, I'll just give an example. There's one of the spike years. The pricing went from international pricing went up by 250%. Stallion was the only company, including counting all the peer group also. Stallion was the only supplier in India for a period of 4 months. There was no other supplier. We had anticipated, we had built up our volumes, we knew exactly what is going to happen. So internationally, the pricing, globally, the pricing moved one direction. But we had the complete control over our pricing and what we wanted to do in India. So the pricing of product, if you know the market, if you know the business, yes, you have control over it. If you do not have, you will be led by the international pricing.
Next question. What are your main raw materials and whether you source them locally or do you import raw materials?
Our raw materials are 100% imported.
Next question. Next question, please. Kaushal Sharma, what is normal receivable days in our business and payment terms with customers, and why do we have high receivable days?
Most of the large MNCs, especially in the circuit breaker, gas insulated substation businesses, etc., they similarly have long payment periods from their customer, which is the government or power grid corporation, etc. And there are project based businesses. They usually, all our payment terms with them are 6 months, 120 to 180 days. Now, basically, since we have been in that business from quite some time, we have ended up getting most of the products tied up with their bank, with their finance, and paid out instantly at a cost which is already discounted in our costing with them. Now, a lot of the new businesses, when we wanted to diversify and enhance the product range and the application range. The new customers, again, all MNCs and all large companies, not small players or anything, all of them again have 120 days. So in the short term, we have moved into that high receivable cycle. But as we go forward, this will get more streamlined and come down to normal.
Okay. Next question. Mr. Dev, can you share some revenue forecast and margin guidance?
I believe we are not permitted to share anything futuristic. So we are unable to do that.
Next question. Vijay, under which brand name are you selling canned gases and retail market?
We sell it under Stallion brand.
Next question. Dia Patel, thank you for the great answers. Dvani Ahuja, thank you and all the best for IPO.
Thank you.
Sir, I guess we have covered majority of the questions. Thank you, Shazad sir. Thank you, Rajesh sir, and all the best for the IPO. Thank you.
Thank you. And thank you, everyone.